relevant, reliable, and researched. This is Experts on Call, the show focused on delivering leading-edge news and information on today's most beneficial products and services. This is Experts on Call on AM 650.
Welcome back to Quay Pacific's Talk About Strata. I'm Stirling Fox. Tony Gioventu's back in studio as well. Tony is the Executive Director of the Condominium Homeowners Association of British Columbia, as well as, every week, the condo columnist in 24 Hours in the Victoria Times Colonist in the Vancouver province. And I do believe that list does go on, and you've 500 columns and counting. You successful journalist, you.
Never ceases to amaze me. There's so much information to write about.
I know, and to talk about. And we're delighted to have Gordon Lee with us. Gordon is a Strata Insurance specialist with CMW Insurance with offices in Burnaby. Gordon, good to have you with us. We were just talking before the break about the whole matter of deductibility, and I'd like to go back to the example that we've used because there's one little question I have left. I'm the guy with the brand new washing machine that is apparently not as perfect as the salesman at the store told me about it, and the darn thing leaks. I fired up the laundry. I left for work. I created a whack of water damage in my building. I'm the guilty party. I've now been assessed with $10,000 of deductible beyond the insurance coverage. The fix has been made. The repairmen have come and gone, and I've just now got a bill for $10,000. That's my share of the deductible. And I don't have, for whatever stupid reason, the proper homeowner's insurance that's going to cover that 10 grand, Tony. So, and I don't happen to have 10 grand in the sock under my mattress. So now what? Does the Strata Council toughen up and get mean with me? They want $10,000, thank you very much. They've already paid it. They want it back.
Well, the Strata Corporation is probably going to commence court action against you.
Wow.
They will go to small claims, or if it's large enough, Supreme Court. They will get a judgment. The judgment will be registered on your title. So in the event that you remortgage, sell, when you do a transaction with your property, they'll be looking to recover that amount. So that is the eventuality of what will occur, is the Strata Corporation will sue you, will get a judgment for it. What's interesting about insurance deductibles is what's happened historically is that strata corporations and management companies have just parked these on the accounts of people. You owe a $5,000 deductible. We'll leave it on the account. When you sell, we're going to collect that.
Right, okay, fair enough, yeah.
Seems fair enough, except you can't collect insurance deductibles or damages on a transaction to sale with a Form F, which is a payment certificate, which you need to transfer title at land titles. And the other problem is the new Limitation Act, which comes into effect on June 1st next year, is going to limit your collection period to 2 years. So if you're
they're going to have to start putting liens on people's property for $5 grand.
You can't lien. You cannot lien for insurance deductibles or damages. You
Really?
can only lien for strata fees and special levies. So if the insurance deductible is a special levy of all of the strata lots based on unit entitlement, that could be a lien that could be placed against the strata lot. But when it's just one person who's responsible for the claim,
right,
and the strata goes to court, they obtain a judgment, which is just simply registered on the title. And hopefully that when you sell your unit, that judgment can be satisfied if there's enough money left over. But it will not take priority over unpaid strata fees, any federal taxes, mortgages. It's going to come down on the list. So it's kind of difficult to collect some of them if that they're substantial and they're below all the other values on the mortgage. But so $10,000, $50,000, these are reasons why you get homeowner insurance to cover this risk.
Sure.
Right? And this is why you get a copy of the insurance from the strata, so you know what these values are, so you can go to your insurance broker and cover the risk. But the rules change substantially when we look at earthquake deductibles.
Okay.
The values are substantially higher, and how they're apportioned and how they're claimed and what's claimed is significantly different.
And this is, Gordon, where we turn to you, the insurance specialist, because when you start talking about earthquake insurance, you really are in a very different category from all of the other coverage possible in any kind of residential setup, aren't you?
Yes.
So tell us from an insurance industry perspective how they view earthquake insurance and who should get it and how much they should pay for it.
Well, earthquake insurance generally in the strata corporations will be part of the policy. And usually, you're looking at a 10, 15, 20% deductible of the sum insured. So you're looking at pretty significant value. So for example, if it's a $10 million sum insured building, you're looking at $1 million deductible at 10%, of course. And if it's 20%, well, it's $2 million.
So it's a percentage, the deductible for earthquake, it's a different way of factoring this, and the deductible becomes 10% of whatever the total value of the strata property is.
Yes, and not,
wow.
Yes, and
so
not
if you're
of the
building,
damage.
if you're in a complex that's worth $25 million because there are 4 towers or something like that, then the deductible is going to be $2.5 million.
Yes.
Wow. So how do the individuals in those 4 buildings cope with splitting up $2.5 million? Because that's what's going to happen in the case of an earthquake, right?
Well, what's going to happen is the Strata Corporation, so just take it logically, and we'll talk about this a little bit, what's going to get damaged. But there's been a claim, and let's say that they are fortunate enough to only be a 10% deductible.
Right.
And a single tower of 100 units can easily exceed $25 million in construction
I suppose
appraisals.
So. Yeah, yeah.
So 100 units, $25 million, $2.5 million deductible, $25,000 per strata lot. That'll be their share. It's the one time, that's the average, but it's the one time in the legislation where the Strata Corporation obviously likely won't have this money in their reserves to pay the deductible.
Yeah.
So the Strata Corporation will have no choice but to special levy the owners directly. And so, again, this is where unit entitlement, the formula that determines your percentage of all the costs is applied. And so if you have a unit that's twice as large as another unit, a smaller unit might be paying $15,000, you might be paying $40,000, right? So the variables are going to be applied here based on your unit entitlement. But what will happen is Strata Council will basically have a meeting. They will pass a resolution, which is a special levy, and the owners will be getting a letter in the mail saying, your share of the deductible is this amount. It's due and payable on the 1st of this month. Now, hopefully, if I'm a homeowner with a policy that includes earthquake coverage, and most of the earthquake coverage on the policies is limited out at $25,000. So if I'm lucky enough to have at least some of that coverage, I will then take that letter and that special levy and go to my home insurer. That will be my next step, who will then arrange for the payment for my share of the deductible, less whatever my deductible amount is.
Gordon, as a homeowner, as an owner of an individual apartment in that 100-unit building, and I have my homeowner's policy, how many people, this is calling on your experience here, how many people have homeowners' policies that include earthquake insurance? My guess is not many. Is that true?
I think the percentage is still pretty low out there.
Okay.
People just don't believe that, they need this coverage, or you hear comments that, well, if something happens, maybe they won't be able to pay this coverage out, so they don't buy it.
Ah, okay. Now, so the case is, more often than not, they're likely not to have earthquake insurance. Is it because it's prohibitively expensive, or is it just because people don't think it's going to happen to them?
I don't think it's very expensive. If we compare to other parts of the world like California, the cost is probably a fraction of that cost. And,
all right.
For a small amount of money you pay, they're getting huge amount of coverage. So I think it's great value, and everybody living in the lower mainland needs to have this coverage.
Now, I mentioned at the beginning of today's program that on October 18th, throughout the English-speaking world, 14 million people around the world participated in something called the Great Shakeout. Here in British Columbia, there were slightly over 500,000 people, mostly school children. The deal was you take 1 minute on this particular day and you go through the stop, drop, and cover routine that you should automatically go through in the event of an actual earthquake. Tony, when we were talking about this, gave me one of those baleful looks and muttered during the break that, well, not many apartments in British Columbia paid any attention to that one. I get the impression, Tony, from that remark that this contingency, the possibility of an earthquake, as Gordon has just described, the individual homeowner going, not likely to happen to me. So property managers and strata corporations have the same, couldn't possibly happen to us attitude.
Well, it's not just earthquakes. We have the potential for any type of disasters. We have potential for just power loss in buildings.
Sure.
Right? If our power grid system is compromised by a fire in the northern part of the province, how much preparation have we made? And it's kind of frightening, the number of strata corporations who don't really have active emergency plans. You know, a high-rise building doesn't have updated owner and resident lists. They don't have updated service and maintenance with their emergency systems or their generators. And we've had some recent experience with this with power grid losses in Gastown over the last few years,
Right.
Where we've had some high-rises that after an hour discovered their generators stopped working, and it's simply because nobody was filling the fuel tanks.
Oh, for goodness sake.
And, you know, simple little preparation. Individual owners with their own emergency plans, their communication plans, how they're dealing with their children, you know, their emergency kits if they need to get out of the building, and medication and money, and, you know, what are you going to do in the event of an emergency? It's something we're going to have to pay a lot of close attention to in the coming years, because it's, as we build greater density in areas, it may not necessarily mean that your building has been affected, but an adjacent building has been adversely affected, making your building unsafe. You may still have to evacuate your buildings.
And we've seen this recently as in the last couple of weeks, when the Hurricane Sandy hit the U.S. Northeast. Now, it wasn't an earthquake, but it was a phenomenal natural disaster that caused enormous disruption. And we saw, in a lot of cases, buildings being required to be evacuated. And I get the impression from those remarks, Tony, that there aren't many buildings here in British Columbia that have any kind of organized evacuation procedure even.
Well, we do have buildings with fire safety plans, and I think people are fairly good at that.
Okay.
You know, we whether they're actively updated and whether they're implemented and whether people actually make all of the owners in the buildings aware of the fire safety plans, that's another issue.
Right.
But we do have some active fire safety equipment and some fire safety plans. But just the simple concept of evacuation. You know, a few years ago, we had a building in Vancouver that had a meth lab that had exploded in the building.
Right.
The building had to be evacuated
yeah.
while it was being restored. Well, the evacuation was almost 2 years. And the greatest problem with all of that was many of the residents in the building had no evacuation insurance. They didn't have some mechanism to pay for them to be living in another location. And the evacuation coverage, you know, Gordon will get you to talk on this, the evacuation coverage has a lot of variables to it. It may
Right.
not just be a simple coverage in the event of earthquake. It may have some limitations to it.
Gordon, first of all, are strata corporations required by law to carry earthquake insurance?
No.
Really? So that means they can opt out if they want. What's the percentage, therefore, of strata operations of all descriptions, British Columbia, that say, nah, we'll pass and don't have earthquake insurance?
Very minimal.
Very small.
if
So
any.
most of them are
Yeah.
smart about it, living in British Columbia. Come on.
Yes.
Yeah.
I mean, we all know it's simply a matter of time. And so it's pretty high risk not to have any coverage, isn't it?
Yes. And it's offered as because it's offered as part of the package. It's not offered as an option because it's on a commercial side.
Right.
So it's very, very rare we'll see a building that's not going to have earthquake insurance as part of the coverage.
Now, would that coverage be arranged by the developer as the building was under construction, or would the property management company, assuming it's not the developer, once the building is open and ready for occupancy, is it the developer or the property management company that actually secures and continues to renew the earthquake insurance?
Either or.
Okay.
We see some developers would set up the strata policy and then, you know, transfer that to a property manager, or a property manager's involved from the get-go and set that up.
Okay.
Yeah, so it's kind of in the strata councils themselves, but people need to understand that every year you're starting with a new policy.
Right.
It's not simply a matter of renewing last year's policy. There are changes constantly in the industry. There are new limitations. There are new capacities for insurance. Coverages change, deductibles change, limits change. One of the reasons, though, why earthquake insurance is not mandatory under our legislation is because there will be the eventuality that some parts of the province you won't be able to buy earthquake insurance.
Interesting. Just because of the risk factor?
Yes.
All right, we'll talk about that when we come back. We're taking a quick break here on Quay Pacific's Talk About Strata on AM 650. Back after this.